Today, I want to take a look at Tesla because something really exciting is going on with this stock, and it's a unique situation for traders. Now, most of you probably know Tesla has been a target of short sellers for years. The CEO, Elon Musk, he's openly expressed his distaste for them. He's called them out over Twitter. He even mocked the SEC, calling them a short seller enrichment commission, and last week began selling red Tesla shorts on the company website. But it seems that Elon is going to have the last laugh because Tesla stock has gone parabolic, and here's why. Now, as of last week, the value of Tesla stock held short was $19.95 billion. I'm sure it's reached $20 billion now, making it the first stock ever to have a $20 billion short interest position on it. Now, according to analysts, Tesla shorts have already lost over $18 billion betting against this stock, and most of those losses happened in June and the first week of July. And as we take a look at this chart right here, that's when the stock really just went insane. They got short around the 800 mark, jumped to 1,000, which most people thought was resistance, and it has just skyrocketed beyond that level. It's up another 50% last week, and what you are witnessing right now is the biggest short squeeze of all time. Now, if you're not familiar with the short squeeze, let me explain how this happens. So most investors want stocks to go up. We buy it, try to buy it low, hope we can sell it high, and that difference is our profit. Well, short sellers are different. When you're short a stock, you're betting on it to fall. So instead of buying a stock to initiate the trade and selling to close it, what a short seller does is they borrow the stock from the broker, they sell it to initiate the trade, and then their goal is to buy it back lower. And that difference, how much the stock went down, is their profit. But there's an issue with shorting the stock, and that is your risk is unlimited. Okay, if I buy a stock for, let's take Tesla here, $1,500 a share, and it goes to zero, it goes bankrupt, I've lost that $1,500. That's my max risk. But if you're short a stock, it can go, there's no limit to how high it can go. So your losses can be many, many, many times what your initial capital was. And that's where we're getting into with Tesla right now, because everyone has an uncle point, right? If this stock keeps going higher, you're short the stock, your losses are getting bigger and bigger and bigger and bigger. Eventually, everyone has a point where they go, I can't take it anymore. I'm going to buy it back. I'm going to exit this trade. I'm going to take my loss. That's especially true for institutional traders. If you're a trader on the desk of a big hedge fund, you've got a short position on Tesla, you're down 40, 50, $60 million and counting. Eventually, your risk manager is going to come tap you on the shoulder and say, hey, you're hitting your limits. You need to either trim this position down or close it out altogether. But here's what you got to remember. When you are short a stock, to exit the position, you buy. You sell to open, and you buy to close. So all these short sellers hitting their uncle point, when they exit the trade, they're buying the stock, and that's it's fueling the rally, pushing the stock price higher, and then forcing even more short sellers to close their position. So it creates this domino effect of losses. And that's what's going on right now in Tesla. We've got a huge, huge short squeeze. All these people who are smarter in the stock market, it got to 700, 800, 1,000 bucks. Said this is too rich. It's too highly valued. It's got to go lower. I'm going to bet against the stock. I'm short, and they're getting squeezed. They're getting pinched here. So the only saving grace for short sellers, the only thing that can make any stock go down, is if there is more selling than buying. So it's going to be either people taking profits in their position, or what they're really hoping for is new short sellers coming in and taking huge short positions. And that short selling, again, if there's more selling than buying, it's going to go down. If there's more buying than selling, it's going to go up. So they're hoping more sellers come in. But that's not happening, and that relief is unlikely to arrive anytime soon. The reason? Borrow fees. Now, as I mentioned, when you short a stock, you borrow that stock from the broker. You go sell it on the open market. Let's say you sell it for $1,000. Your goal is to let it fall down to 500. You buy it back, return it to your broker, go, here you go. You sold it for 1,000, you bought it for 500, and he's going to charge you a little bit of interest on that stock during the time you borrowed it. Okay, now not a lot. Usually the rate on for short sellers is around 0.3% per year. It's very, very low. However, in an event of short supply, meaning there's a lot of investors are trying to short the same stock, that fee is going to go up because brokers don't have that many shares to loan out. So that could go as high as 20 to 30% annual interest. Well, guess what the borrow fee is on Tesla right now? If you try to short Tesla stock at these prices, brokers are charging between 850 and 950% annually. That's right. That's an interest rate. 850% is what you're paying to borrow that stock. So it's unfeasible. It is completely unfeasible unless the stock just falls 1,000 points in a day to make this trade worth it. Even people that are already short, their outstanding borrow fees have gone up. They're right now around 600%. So not only is this stock going way against you, you're getting a huge losses mounting, you've got daily interest hitting you as well, piling onto those losses like a stack of bricks on your shoulders, and just further exacerbating this situation. And that's what's killing short sellers, why Elon is having a heck of a good time watching this happen. And it's why the stock has gone just parabolic from, as we see here on the chart, $400. Yeah, what was it? What was the low here? 350? Stock was a $350 stock in March. Here we are, July 14th. So 4 months later, it's gone from $350 all the way to a high of $1,800 a share. Now, eventually the stock will come down. I mean, let's be honest. It's not worth what it's worth. I mean, the thing is, at current prices, the 10th most valuable company in the world. It doesn't have anywhere near the profits or the revenue to justify that. Could it get there one day? Sure. But today it's not worth it. The stock's going to come down. But it's going to take some time. But what's going to have to happen for the stock to come down is lots and lots of these long-term shareholders are going to need to take their profits, meaning everyone who's owned it from 30 and 100 and 200 and whatever, all these longs going to go, this is probably as high I think it's going to go for the next 5, 10 plus years. I'm going to go ahead and sell here and take my profits, right? You got to get it out of the strong hands, right? The weak hands are already selling and taking their profits on the quick moves. But the strong hands, the guys who are trying to hold it for 2, 5, 10, 20 years, they got to see a pretty big move. And they really have here, depending on where they bought it, and they may sell it. The other thing is you just got to work through the short positions. All these short sellers have to close out their positions. Most of them are going to take huge losses, but they have to get through all that inventory, all that buying that is going to come from the short sellers closing out their positions. And only when all that buying pressure is no longer there can the stock fall as it runs out of new buyers up here at these levels. I mean, you got to understand, a lot of people, there's not people pounding the stock at $1,500, $1,600 a share going, this is a steal, I think it's going to go higher. The buying is all coming from the short sellers. It's all the people who are short this stock hitting their uncle point, hitting max losses, say, I can't take it, this is insane, I don't know how high it's going to go, I got to get out. And that's the buying. It's not new traders. It's not new, there's a couple of Robin Hood kids getting into the thing for one share at a time, but nobody's buying 10,000 shares of Tesla at $1,600 a share. They're just not. It's a crazy trade. So until then, until we get through all the short positions, until the strong hands kind of take their profits and we get through all those buy orders, it's no telling how high Tesla stock can go. But for those reasons, I don't think it's going to collapse anytime soon. I mean, as soon as the thing, remember, there's all these backlogged short sellers. So the thing gets down, let's say it goes from 1,500 to 14 to 13, et cetera, they're going to be closing out their short position saying, screw it, I'll take a 40% loss instead of an 80% loss, and their buying is pushing the stock right back up. Now, as far as trading this situation, I'm finding it difficult to get into any trade that's going to make money. The reason is the implied volatility of this thing is so high. It's astronomical, probably the highest we've ever seen in a large cap stock, that the option prices are just untradeable, right? So right now the stock's at $1,500. Yesterday I looked at the thing, the $2,500 calls that expire in a week were trading for like $50 a share. So it's $5,000 a contract for an option looking for a $1,000 move in the stock in the next 5 trading days. I mean, that's crazy. So the ones at the money are selling for several $100s a share, so several $1,000, $20,000, $30,000 per contract. So buying options, either puts or calls, you're paying so much for them that even if you're right on your move, you may not make a ton of money on it. The other side of it, you look to sell options, but there's not much difference in the spreads. You could sell calls. Imagine, bet it's going to go low over a certain amount of time. But again, you've got unlimited risk. You have to have level 4 option trading clearance, much you don't have. You could sell puts on it to hold up for a week or so. But again, if it falls too far, you got to be willing to pick up that stock. And most people aren't willing to pick up 100 shares of Tesla at $1,400, $1,500 a piece. So There's not a lot of ways to structure a cheap trade in Tesla. You can day trade the thing. The options will move fairly quickly intraday. But if you're looking to do something where you'll buy a longer term option that's 2 months, 3 months out, or structure some kind of spread trade, there's really not much you can do with it there. So that's what's going on with Tesla stock in the biggest short squeeze of all time.